Good morning to all of you. Shabah al-Khair. And welcome to all to this important Islamic finance. First of all, let me recognize with us as representative of His Majesty the Emir, the Deputy Prime Minister and Minister of Exterior, Sabah al-Khalid al-Sabah. I hope I'm not pronouncing that too poorly. And with us also the Minister of Finance, Anna al-Saleh. Thank you so much for sharing this moment with us. Let me first of all start by thanking enormously the Central Bank of Kuwait and His Excellency Governor Mohammed al-Hashel. Thank you so much for having really taken yet another initiative in support of Islamic finance, and we are delighted by the cooperation that at the IMF we have enjoyed with you and of course with all you dedicated team which has put such an effort into organizing this event. I would like to commend you for your relentless efforts and enthusiasm in promoting Islamic finance, and frankly I don't think I could have dreamt of a better first speaker because my job is easy. You covered all the ground. I would also like to thank the Middle East Center for Economics and Finance for organizing today's event as well, and I'm grateful for the big effort that they put into it. All of you, finance ministers, governors of central banks of more than 40 countries in the room today, you are very welcome, and we are delighted that you could make it to this conference in beautiful Kuwait. It's an important matter, and as the Master of Ceremony has indicated, certainly one on which the IMF is concentrating more resources, more effort, and I would like to recognize all our departments which are working on a very well-coordinated basis under the leadership indeed of Jose Viñals for the market and banking departments, but also Masoud Hamed, who is the director of the Middle East department. I'm saying all departments because it's a fascinating initiative and area of research and surveillance. Not because it focuses on the Middle East or on the Muslim countries, but because it cuts across all area departments of the International Monetary Fund. And all of them are actually involved in the research projects or in the work that we are currently doing on Islamic finance. So, we all have a great day ahead of us with promising panel discussions. And what I can assure you of is that we at the IMF are very keen to participate, to listen, to understand better, to innovate, to develop, to continue the surveillance work that we do, and to include in that surveillance work the dimension of Islamic finance. One of our jobs is to contribute and help with economic and financial stability, and to ensure that growth can be as sustainable as possible. You have identified stability as one of the key attributes of Islamic finance, and therefore it is perfectly legitimate that we include Islamic finance as one of our key areas of research, understanding, and work going forward. And we see this conference as an opportunity to do so on a comprehensive basis. So, given that you have covered all the ground, I'm going to focus on a few issues which I believe will be central to not only our deliberations today, but also the development of Islamic finance in a consistent and universal way. But before I do that, I would like to maybe recall what, not go back to history, you've done that perfectly, but recall what the promises of Islamic finance was, and is, and should be. To foster inclusive growth and support the livelihood and aspiration of the people in the region where it is applied. And as we know, inclusion is key to promote inclusive, of course, but sustainable growth as well, and shared prosperity. So, Islamic finance is not new, you said so, and it has been practiced for centuries around the world. But it has gained in popularity of late. Total Islamic finance, as you've indicated, covers assets in about $2 trillion at the moment, which is not enormous relative to the total assets transacted around the world, and it is a tenfold increase from a decade ago, and outperforming the growth of conventional finance in many places. Let me mention two key appeals of Islamic finance. One is, as I said, inclusivity or inclusiveness. We believe that Islamic finance has the potential to contribute to higher and more inclusive economic growth by notably increasing access to banking services for undeserved population. To this day, a large segment of the Muslim population, who are a primary but not the only market for Islamic finance around the world, remains financially underserviced, with only 1/4 of adults having access to bank accounts. In addition, Islamic finance's risk-sharing features and the strong link of credit to collateral means that it is also well suited for small and medium-sized enterprises and startup financing, which, as we know, can promote growth and are essentially the key job creators around the world. For the same reason, Islamic finance has shown its value, and you mentioned that as well, in infrastructure investment, which can spark productivity gains and catalyze high value-added growth, short-term, medium-term as well. So that's one, inclusiveness and particular segments that are underbanked, underfinanced around the world. Second attribute is stability. Islamic finance has in principle the potential to promote financial stability because its risk-sharing features reduces leverage and its financing is asset-backed and thus fully collateralized on both accounts. Profit and loss sharing on the one hand, second, the asset-backed aspect of it. In addition, besides deposits, Islamic banks offer those profit-sharing and loss-bearing accounts that can help mitigate losses and contagion in the event of banking sector distress. This leads de facto to higher total loss-absorbing capacity, which, as you know, is a main concern not for Islamic finance alone, but all the financial sector and the banking sector in particular. This is clearly identified in the new global financial reform. I think it is also fair, and you have referred to that in your first part on the history of Islamic finance, but I think that history transcends times, that Islamic finance's underpinning principles of promoting participation, profit and loss, equity, property rights, and ethics are all universal values that actually transcends times. Yet, despite these important benefits and the clear potential, there is still a long way to go to fulfill the maximum potential of Islamic finance and to deliver on the promise that it makes. Today, those $2 trillion that I mentioned, well, it only represents 1% of global financial assets and is still very much concentrated on a few markets. So there is room to grow, especially given that the features of Islamic products can appeal to a much wider group. Now, of course, as Islamic finance expands and takes on greater importance in countries' financial systems, it will be important to nurture this development in a safe and sound manner. And I would like to turn to some of the key priorities which I believe we should focus on in order to unlock that full potential of Islamic finance, but do so in a safe and secure manner. And I will mention 3 priorities which need to be explored and probably developed. The first one is to level the playing field and create an enabling environment What does that mean? Well, it means adapting financial regulations that take into account the defining features of Islamic finance and do not neither advantage nor disadvantage Islamic banking. So principle of non-discrimination and adaptation. For example, capital requirements for banks should be adapted to account for Islamic finance's risk and profit sharing model, which allow for some loss bearing by investors and reduces risk weights applied to equity-like financing. Leveling the playing field also means harmonizing the tax treatment of Islamic finance products. Now, that's the part of my speech that I'm very familiar with, because when I was finance minister for my country, France, we did a lot of homework to actually iron out, modify, and improve the tax system in order to account for the specific features of Islamic finance. For example, income tax systems typically recognize interest gains on debt instrument as being tax deductible. Well, this debt bias puts Islamic finance at a competitive disadvantage and discourages risk-shared financing. Some countries have already remedied that situation, but many others still need to do it. And once that is done, there's a lot of hard work that also need to be put into the myriad of international tax treaties that actually do not recognize and take into account the specificities of Islamic finance. Third point that needs to be also focused on when it comes to a better level playing field, we need greater consistency in the application of regulation and supervision to Islamic banks and governance across jurisdictions. Islamic standard setters, including the Islamic Financial Services Board and the Accounting and Auditing Organization for Islamic Financial Institutions, have done a very impressive job in actually establishing the rules of the road. And in so doing, they have developed closer cooperation with conventional financial standard setters, which bodes well for global financial stability. But we believe that more needs to be done, because part of our attributions is to actually do bilateral surveillance and to check not just the economy, but also the financial sectors of each and every member in the institution. And we have 188. And what we see is a degree of inconsistently applied standards across countries. And this could really stifle the development of Islamic finance, and it needs to be avoided by all means. I think this is, I hope, a matter that you can address and discuss in your debates today. Second priority for policymakers is to further develop the industry and the markets. Now, what do I mean by that? First of all, information. As I mentioned, one area for development is the small and medium-sized enterprises that need access to financing and which can greatly benefit from the features of Islamic finance. But to do that, clearly, good, reliable information is needed about the SMEs in which those Islamic finance products can be used. Particularly information about the availability and solidity of the collaterals. That's on the information front. Second front, staff. You need well-qualified staff who can actually help meet the high demand for Islamic finance products. And third, the Islamic banks need to bolster their risk management capacity for the SME lending that I was referring to. Now, who is going to do that? Some of these initiatives you will take. The industry can do that. Others, of course, will require the regulators to ensure that adequate credit risk systems are in place, with development banks partnering with Islamic banks for SME financing and capacity building, and with government fostering financial education and literacy. So it's a collective effort. The industry, the regulators, supervisors, and the governments, if you want to cover the ground of all these points that I have identified as helping the developing of the industry. Now, I mentioned also the development of markets. Think of the growth potential of sukuks. Over the past decade, total outstanding sukuks assets have been a tenfold increase to 300 billion. Most of these assets remain concentrated in the Gulf states and in Malaysia. But this is not the end of the story. We have seen in the last few months interests out of Luxembourg, South Africa, Hong Kong, and lately London, or the United Kingdom, should I say, and with great success. Now, the challenge for policymakers is to help develop these markets in order for them to reach their full potential. How can that be done? In our view, there should be more sovereign issuance at different maturities in order to help establish benchmarks for secondary markets. Sovereign sukuk plans need to be embedded in government debt management strategies. And the market needs to be supported by strong legal and regulatory framework in order to ensure the protection of investors on a sustainable basis. Many countries also need to develop money and interbank markets for Sharia-compliant instruments to help Islamic banks manage liquidity needs more effectively. An underdeveloped market forces Islamic banks to hold excess liquidity buffers. It also limits central banks in the conduct of their monetary policies, particularly in countries with large Islamic banking systems. And here I would like to commend the role of the International Islamic Liquidity Management Corporation. It was successfully established by EU central banks to create and issue short-term Sharia-compliant instruments to facilitate effective cross-border liquidity management. Third priority, further strengthen regulation and supervision to ensure financial stability. As I mentioned, it's one of the features of Islamic finance, it's one of its assets, and it needs to be protected. Consistency in the application of regulatory and supervisory standards, I have mentioned that already. It's essential not only because it helps level the playing field, but because it helps manage the risks associated with Islamic finance and will prevent potential regulatory arbitrage. At the same time, we should of course ensure that Islamic financial institutions themselves are not either over-regulated or under-regulated, and that standards are adapted to take into account the specific features of Islamic products. The gradual implementation of the Basel capital and liquidity requirements adapted for the features of Islamic finance will be absolutely key in that respect. The transition might not be very easy for Islamic banks, particularly regarding liquidity, but it can be seen as an opportunity for development of new instruments, new markets, and will need to be completed to ensure the resiliency of the national banking systems. Today, already 10 countries have identified and are recognized as having Islamic finance being a systemically critical part of their operations. It accounts for them, for each of those 10, for more than 15% of total financial assets. And of course, with increased clout comes increased responsibility on the part of Islamic finance and a growing need for oversight. Financial safety nets, including deposit insurance and lender of last resort facilities, also need to evolve to take into account specific features of Islamic finance. Without these upgrades, countries may not have the tools to adequately respond to shocks to individual financial institutions, nor would they have the capacity to prevent spillovers to the more conventional banking system. Now, from the IMF perspective, we are also looking to raise our game. As you know, financial stability lies at the heart of our mandate. We have over the past year done a large amount of analytical work to deepen our understanding of Islamic finance implication for financial stability and for economic growth. We will continue to pursue this agenda and to further strengthen our policy advice by incorporating best practices for Islamic banking and finance into our regular surveillance work. So you have been very generous with quotations of key authors, writers, economists from around the world. Let me conclude by quoting Ibn Khaldun, the great 14th century scholar, who once said, and I quote, I wish I could do that in Arabic, "He who finds a new path is a pathfinder, even if the trail has to be found again by others. And he who walks far ahead of his contemporaries is a leader, even though centuries pass before he is recognized as such." I think that unlocking the true potential and delivering on the promises of Islamic finance requires this strong leadership that he had identified. Strong leadership and collective approach, from Islamic banks to policymakers, from regulators to international financial institutions, such as the IMF, such as the World Bank, such as the Financial Stability Board. We all know that effective collaborations actually yield success. We have worked very closely with standard setters to assist them in developing international norms for Islamic financial institutions, and we have helped very early on, actually, before my time, so I'm not the only one interested in this matter. We have helped with the establishment of the Islamic Financial Services Board many years ago. We continue to work on a bilateral basis with our member countries, providing technical assistance in areas such as Islamic bank regulation and supervision, the development of sukuk markets, and monetary policy implementation in countries with a large Islamic finance presence. We also aim to cover Islamic finance more systematically in our bilateral surveillance. At the same time, we have enormously benefited from the guidance of the major Islamic finance standard setters and multilateral institutions in our analytical and policy work on Islamic finance. They now form, as you mentioned, an external advisory group for our work in this area, which we highly value. And I'm also very pleased that the Islamic Development Bank and the IMF have agreed to expand our partnership to support capacity development in Islamic finance. So cooperation has already been quite successful and has yielded important results. We're keen to deepen our engagement by listening to the views shared today, by building on today's conference, by continuing the close cooperation that we have had with many of you. We want to participate in whatever initiatives will promote sustainability, stability, and inclusion, in particular when it meets the needs of underserved populations. It will lift potential growth, and it will create better opportunities for all of us and all of them. Thank you very much.